everybody. In this video, I'm going to talk about the yuan peg to the US dollar. The yuan is, of course, the currency of China. It provides not only a good example of a pegged exchange rate, but it also provides nice examples of a couple of the other concepts we've studied in class recently, including devaluation, revaluation, foreign exchange market intervention, or as some people use the term, currency manipulation. It includes examples of capital flows and capital flights and capital controls, and the intersection of politics and economics. All right. China devalued the yuan in 1994 and hard pegged it to the dollar at an exchange rate of $1 to 8.28 yuan. Most people believed that the yuan was undervalued relative to the value that would have been determined on foreign exchange markets, especially given China's large and growing trade surplus during this time. A trade surplus should appreciate your currency because if lots of people are buying your goods and services, they need your currency in order to do that. So there's a higher demand for a currency if a country has a trade surplus, lots of exports. So most people believed that China was intervening to keep the value of the yuan below its market value during this time. And the main evidence of that is the accumulation of foreign reserves. We can take a look at that really quickly. So here are foreign reserves accumulating over that time period. They continue to accumulate, but over this time period, they were also accumulating. This is the so-called giant pool of dollars under the People's Bank of China that your podcast quiz was about a couple weeks ago. In 2005, China dropped the hard peg, switched it to a soft peg. Basically, they said they would only intervene to prevent large and sudden movements in the exchange rate of the yuan, and that they were going to allow market forces to take a bigger role in determining the value of the yuan. There was a lot of international pressure building up for them to do this. They made another change at that same time. Instead of the yuan being pegged only to the dollar, it's now, starting in 2005, it was pegged to a basket of currencies. Now, the dollar is the most important and heavily weighted in that basket of currencies, but it is still technically a basket of currencies that the yuan is pegged against. So over the next few years, the yuan was allowed to appreciate or allowed to revalue. And then came the financial crisis in 2008 to 2010, and they temporarily reinstated the hard peg, but dropped it. And after that, the yuan appreciated somewhat over time. By late 2014, the yuan had appreciated by 26% against the dollar. Concerns over the health and future economic growth of the Chinese economy began to flare up in 2015. Let's see a few headlines. There was a big stock market collapse in 2015, for one thing. Capital was flowing out of China starting in 2015 because of all of these concerns about future economic growth. Let's hear just a minute or two of the explanation for the capital flight or capital outflow during this time.
Last year, Chinese people and businesses sent an estimated $1 trillion overseas, and that's forced China's government to spend a fortune trying to prop up the value of the currency, the renminbi. What's happening? What does it mean for the rest of us? NPR's Frank Langford is on the line from Shanghai to help explain. Good morning.
Good morning, Renee.
This is a big change. When did people start sending so much money out of China?
Well, people have been diversifying their assets here and investing abroad for a while, but last year the floodgates really opened. There are a couple of reasons for this at least. Growth, of course, is continuing to slow here, but for the first time also people have real doubts about the economic leadership of the country, and there's worry if the currency loses more value, their assets are just going to decline more.
Well, have you been able to talk to people in companies also who have been sending money out?
Yeah, actually, it was very easy. I was at a luxury mall this week in the financial district. I met a guy named Brennan Sau. He's 25. He used to work in private equity. And last year, he said the company that he was working for, they set up funds in the Cayman Islands, and they sent 40% of their assets there. And the reason was, just like we were talking about, worried that the renminbi was just going to keep losing value.
他们主要做的是私募股权投资这块。
In the past, they invested all their assets in renminbi, but since last year, they started investing in assets denominated in U.S. dollars. Altogether, they moved out $60 to $70 million. In Shanghai, mid and large private equity firms are all reallocating their assets like this.
Yeah, so Renee, of course, China does not want this money pouring out like this, for sure. So it only allows each person with a government ID card to change $50,000 worth of renminbi into dollars each year. And so I asked Brennan this. Is it hard to move the money?
Not that hard.
How do you do it?
You just get more ID.
So the way it works is you borrow the ID cards of, say, 10 family members and friends, and you can move $500,000 out of the country. Of course, it's not just private equity firms. Lots of people are doing this. Now, that's what Xu Bin says. I was talking to him earlier this week. He's a finance professor at China Europe International Business School here in the city.
So those are examples of capital controls, the fact that you're not allowed to exchange but a certain amount of currency. And you often hear it stated that China's capital controls are porous, which means people find ways around them to some degree. Here's a nice graphical representation of the capital outflows of China that we are talking about occurring in the 2015 timeframe. So during that time frame, the Chinese government actually devalued the yuan in August of 2015, and it was a big surprise. It took everyone by surprise. It was a 3% drop, but that was the largest drop in value since that 1994 devaluation. Market forces were pushing the yuan down already. Essentially, the Chinese government allowed the yuan to depreciate in response to market forces to some degree. Let's watch this brief video explaining how it unfolded.
Until today, China's currency was tightly monitored and was only allowed to fluctuate within a narrow, predetermined range set by the central bank. But this morning, that all changed. In a shock move, the People's Bank of China announced it was letting market forces play a bigger role in valuing the yuan. Instead of the PBOC setting the midpoint of a 2% window in which the yuan could move, now that midpoint is based on the previous day's closing price. The policy change meant a one-time yuan devaluation of 1.9%, according to the bank, because the key midpoint value had been divergent from the market rate for some time.
The market has been calling for some reform to the fixing mechanism for some time, and actually we ourselves have been calling for such reform to happen within this year. So there was always, I think, an expectation that the PBOC will eventually do something to make the fix more market-driven, more transparent.
Now, some will claim China is weakening its currency intentionally just days after poor export data signaled another headache for its slowing economy. And the United States has long accused China of keeping its currency artificially low to help its exporters. But China's central bank says this move is part of reforms designed to have market forces have more influence over the yuan. That could boost China's campaign to have the yuan included in an elite grouping of currencies used by the International Monetary Fund. To be included alongside the dollar, euro, British pound, and Japanese yen would lend major prestige to the yuan, a currency already being used more and more in global transactions. Stephen Zhang, CNN, Beijing.
All right, so that was the story of the devaluation that happened in 2015. Shortly after things turned around to some degree for the Chinese economy, the worries waned about slower future economic growth. I'm not sure exactly the underlying cause behind that. Probably one factor is that the Chinese government has been doing expansionary fiscal policy and expansionary monetary policy over the last couple years to try to support the economy, let it have a so-called soft landing, because invariably, as you hopefully learned during your Principles of Macro class, those extremely high rates of economic growth can't be sustained forever, perpetually. Okay. So the yuan was appreciating during this time frame up until April 2018. And then something happened in April 2018. The tariffs were announced and started to be implemented soon after. So the tariffs generated more concern about the future of the Chinese economy, because if you're going to get into a trade war with the biggest economy on the planet, that tends to make people be concerned about Chinese economic growth. So the yuan has been overall depreciating since that time, and one of the biggest things that happened recently was in August 2019, the Chinese government, the People's Bank of China, let the exchange rate fall below 7 yuan per dollar. And that only has a psychological importance because typically in the past, the dollar has been stronger. So this was an extra weakening of the yuan that hadn't occurred in the past. It was viewed as a possible signal that China was willing to escalate the trade war with the United States. And here's the reason why. When the United States puts tariffs on Chinese goods, it makes those goods more expensive to people in the United States. But if the Chinese currency depreciates, it can offset that. So for example, a 10% tariff can be offset by a 10% depreciation. It removes the extra cost of the good. The People's Bank of China actually allowed the market forces to weaken the yuan. What happened was they failed to intervene to prevent it from happening. They didn't go out and use foreign reserves of dollars to buy yuan, enough to prevent that depreciation. And that's what prompted the official branding by the United States of China as a currency manipulator, even though they didn't technically meet all three criteria of the US Treasury. And you have a podcast quiz about that. So hopefully this helps give you some background and provide some good examples of course concepts.